Hi, this is Kerry Artek with Wicked Stocks, bringing you the Daily SPY Report for Wednesday, December 1st, 2021. I'm going to cover a couple of quick topics here just to keep you abreast of what's going on with Wicked Stocks. On Tuesday, November 30th, we uploaded a Pfizer analysis for Wicked Stocks premium subscribers. We also uploaded onto YouTube and for basic members of Wicked Stocks a video analysis on the iShares Treasury ETFs. That includes the SHI, IEF, and GOVT. It covers the kind of the full spectrum from near to long-term treasuries. That was uploaded to YouTube. You might have a look at that. It covers sort of the inflationary interest rate outlook and what might play out in the Treasury ETFs themselves. The video analysis for Pfizer, that went to premium subscribers. And I'm mentioning that if you're not a premium subscriber, you may consider becoming one. It's only $25 a month. We offer a 7-day free trial. You can unsubscribe at any time, even during the 7-day free trial, if you like. And we put out at least 2 videos a week for premium members and 1 video a week for basic members. So there you have it. And finally, for tomorrow, Wednesday, we'll be delivering for premium members video analysis on Square Inc., symbol SQ. And so there is that. Before I jump into the charts for the Daily SPY Report today, please click like if you can. If you like the video analysis you're seeing, please click like. And also subscribe. Subscribing to the Wicked Stocks YouTube channel will apprise you of notification each and every time we upload the Daily SPY Report for your viewing. Generally goes out by 6 p.m. Central Standard Time, Chicago, each and every trading day for the next trading day. So let's jump into the charts and take a look. This is just your basic daily chart. You're probably quite familiar with this by now if you've been following for the last few weeks. Just this sort of sums it up, the 2 to 3 week outlook in a nutshell. I've been talking about how this market is prone to bearish continuation into late December, below long-term resistance that's presently well above the market at 478.60. I'll show you that in a moment. But we really didn't have a clear sign that is likely to happen until we settled a few days ago, actually last Friday, below that 465.72 simple channel structure. Now on Monday, we rallied back, pushed through that structure, spent a good part of Monday afternoon above it, but when we broke back and closed below it, it told me that this market is still susceptible to continuing south into December trade, and lo and behold, here we are. Tuesday, we had a big sell-off, new move lows, new low settlement, and this market looks like it should reach that 441.38 target over the next, I'm going to say by the end of next week, I think is likely. Heck, we might get there this week. Let's talk about the downside today. I have 453.19 and 454.05. You're familiar with 454.05. It is the high from September. I'm throwing 453.19 in there just kind of for slippage stake. It's also the high settlement price. When we put out that high at 454.05 in early September, the high settlement that very same day was 453.19. So let's call it a range of support that could contain selling through the rest of the week, perhaps. And from here, we just may rally back to that 465.72 formation within 2 to 3 days. That is a real possibility, but bear in mind that the market remains heavy. I'm still anticipating 441.38, so we are likely to violate that 453.19 at some point over the next week or two, and it may well be today. So if we break 453.19 on an intraday basis, I'm expecting at least 451.67. If things get ugly as the day wears on, and they may, 449.95 is attainable intraday where the market can place a daily low. And then, of course, if we close below 453.19, that's the scenario where we may actually, by Friday's close this week, actually reach that 441.38 channel bottom. I'd say by the end of next week at the latest, 441.38, once tested, able to contain selling through December, and once tested, we can stabilize and rotate higher, back up into the upper 470s or higher, or wherever the long-term trend line is that I'll show you in a moment. Let's take a look at the support and resistance for today. You're familiar with the 453.19 to 54.05 area I just showed you. That is kind of the 2-star support. 2 stars for me is kind of 2 to 3 day lows. We could get a nice 2 to 3 day bounce from there, perhaps up to 465.72, but I'm not expecting it. I'm just sort of allowing it, if you will. Upside today, 458.97 can contain initial buying pressures, and that is nothing more than the the settlement price last Friday when we broke to that new low and closed below that 465.72 formation. We settled that day at 458.97. So it offers intraday resistance. We can top out there initially, and actually holding below 458.97. I am actually expecting 453.19 to 54.05 today. Now, if we push through 458.97, we may actually reach 462.27 intraday, where this market can place a daily high. And if we close today above 462.27, then that 465.72 channel bottom is likely tomorrow, where once again we can top out through next week. And below which, I don't know how many times I say this, I do repeat myself a lot, below 465.72, maintaining a 2 to 3 week downside target at 441.38. Now, I don't see it happening today, but it is possible by Friday's close that we may actually muster a settlement back above that 465.72 channel bottom. That would neutralize the short-term outlook and, in fact, may actually reverse it altogether. Momentum then allowing that 478.60 trend line once again by the end of next week. And that is our long-term resistance. That trend line goes back almost a year and a half. It's performed well since the September highs in containing buying pressures on weekly and monthly basis. And we have rallied to within 1% of it 2 or 3 times over the last month. If we were to test it, say, by the end of next week, and once again, I'm not expecting that unless we settle someday soon above that 465.72 channel bottom, but that 478.60 trend line able to contain buying through December, possibly into January, and as I've been saying, below which this market remains susceptible to falling south into that 441.38 area by the end of December. And that is underway following the settlement last Friday below the 465.72 channel bottom, and that remains the target. And I'm really not going to budge from that until or unless we close back above 465.72. Until then, 441.38 is likely. We may actually test 426.80 before this is over. I'll get to that in just a second. But let's talk about that if we were to close above 478.60, and I don't see that happening anytime soon, but if by the end of December we do, then just the opposite. We actually have an indication for longer-term bullish continuation through Q1 and into Q2, the 520s and climbing, then considered a 3 to 5 month upside objective. I'm not even going to illustrate that today because we are so far off that mark. Let's take a look at that 441.38 formation again on this long-term chart, that if we were to close below it over the next week or two, and it's possible, then we've got maybe another 3 to 5 days or less before we test 426.80 long-term support. And I'm going to show you a weekly chart right now. This was actually put out on Monday's video analysis, and it sort of speaks volumes in terms of that 426.80 is actually 427.94 on the weekly chart. So if we test that over the next few weeks, and I'm not anticipating it unless we close below the 441.38 channel bottom, FYI. But if we did test the 427.94 channel bottom, it could contain selling through Q1. And once tested, the market can rally back up to that trend line at 478.92 within several months, possibly even higher as we continue into later 2022. But I just wanted to put it out there that if we were to close any week below the 427.94 channel bottom, then we have I'm going to say 3 to 5 weeks at the most under high volatility. We could get down to the 380.95 formation within 1 to 3 weeks or so. And that is sort of our ultra long-term support right now on the weekly chart that, if tested over the next few months, could contain selling through 2022. But we're not there yet. I'm not anticipating it unless we were to close below 427.94. And the only reason I'm going here in terms of this big picture, potentially bearish scenario, is the conditions that we're in right now. I'm not sure where this is going. The crude oil market is continuing to sell off following last week's sell signal that I actually did show on Monday's video. And, I'm going to leave you with the support and resistance here. Once again, the 453.19 to 54.05 area can contain selling, perhaps, through the rest of the week. It's definitely there for aggressive day traders. But just know that I am anticipating an eventual violation of that over the next week or two, and it very well may be today. And if so, 451.67 expected intraday. We could bounce decently off there, but honestly, if it looks like we get into late in the day and this market can't get back above 453.19, we may fall all the way to 449.95 by the closing bell, and then of course closing below 453.19 should by the end of next week or sooner result in a test of the 441.38 channel bottom. Now upside today, once again, 458.97 able to contain initial strength, but pushing through it allows 462.27 intraday where we can place a daily high. I'll leave it at that. Please click like, please click subscribe if you can. I'll be back tomorrow for Thursday's December 2nd Daily SPY Report. Until then, have a great evening.